And for more on this, our editor-at-large, Craig Copetas, joins us from Paris. But first, let's speak to Talha Bhatty in Boston. He's the director of a cryptocurrency resource site, the Crypto Corp. Talha, great to have you on the show. Hello, Craig. Talha, let me start with you first. Binance managed to get two VC companies that valued it at vastly differing amounts. Sequoia valued it at $80 million. IDG had it pegged between $400 million and $1 billion. Mr. Zhao says it's worth $3 billion. Why is it so difficult to value a cryptocurrency company?
Well, I think one of the things that I really sort of loved was in the image that you were just playing a little while ago. It showed the price when the first offer had been made, and the price of Bitcoin was way lower back then. And it's funny, when I was looking at the charts at the same time and I realized that it was going to sort of blow up over the new year. I think the first company that made the bid sort of saw that trend developing, and they wanted to get into the market then. And then after that, obviously, we've seen what Bitcoin has done, and it, since then has grown tenfold, and then halved. And I think that changed the whole dynamic. Like once it crossed 10K, well, when people initially were making claims about it, crossing $10,000, people were just joking. They're like, that's a joke. And then it very slowly it became an inevitable reality. And the same thing happened for it, touching 20,000.
Yeah, I think we were among those people who laughed when people told us it was going to hit 10,000. But look, Talha, despite the roller coaster ride in the value of cryptocurrencies, how have exchanges fared? How have volumes been going for the exchanges that trade these things as the prices of these cryptocurrencies has skyrocketed? Have volumes also gone up, or have they also been volatile?
I think there's a little bit of both, because the big sort of key factor there is that lots of people saw this opportunity, and now the number of exchanges is in the thousands. And it's mind-blowing that Binance, in just 9 months, became the size that it did and had the volume of transactions that it did. But they're like Gemini, for example. Today I was reading this article. NASDAQ says that it wants to become, at some point, maybe an exchange. And it's already therefore working towards developing relationships with other sites like Gemini, which is huge right now.
Right.
Huge to the point that their minimum transaction is $500,000.
Right.
And so that's just the trend that's developed. And the people who saw this 2009 when it started and it was nothing, are really sort of reaping the benefits of being those early adopters and taking on the challenge.
Okay. Talha, we'll get back to you in a second. Craig, let me turn to you. Would you invest in cryptocurrencies at this point? Are you invested already?
Well, I've just invested in a bottle of Vicks Nitol because what I have is a slight head cold, and I'm putting that into my portfolio, which includes the South Sea bubble, John Law's Mississippi scheme, shares in Bernie Madoff's company. I also have some shares I would like to share with our listeners in Juiceroo, also Elizabeth Holmes and Theranos, and let's not forget Elon Musk and Tesla.
Right.
Look, every age has its particular folly, scheme, fantasy, or flim-flam.
Yeah.
And what we have here with Bitcoin is the latest South Sea bubble flim-flam. And it's based on speculation. It's based on the belief that these influencers can say so much good and that any promises for the future that they make are going to come true. And that's how these extraordinary popular delusions, particularly in the markets, begin. A great human mass is bamboozled.
Yeah. Full disclosure from Craig Copetas there. And I can also get you a really good deal on tulips. It's tulip season here in Istanbul, as you might know. Let's look at the legal aspects of this case. Sequoia is suing Zhao because they say he violated an exclusivity agreement with it by talking to our IDG. How common are such exclusivity agreements in the VC space especially?
Well, what's more common and what they should all be more concerned about with their lawyers is that the New York State Attorney General is now launching an inquiry into 13 major cryptocurrency exchanges and how they operate. Now, anything that might litigation about the conflict of releasing information would be a civil complaint. Attorneys general in the United States don't spend a lot of money on investigating something unless they smell the aroma of a criminal conviction. That's how it works.
Interesting. Talha, let me bring it back to you. Craig mentioned criminal links there, and certainly in the early days of cryptocurrency trading and Bitcoin, there was a lot of mention of those sorts of elements in the market. But now people are saying that it's matured, and it's maturing rapidly, that it should be treated as a whole new asset class, almost as a safe haven at times. Is that fanciful?
No, I completely agree with that. And the funny bit is the reason we're having this discussion is because people believe that and have believed that for a while. And it crossed 10,000, and that's when we need to have this discussion, is that it should become an asset class. But those people haven't treated it as such, for the last 8-9 years. And Craig mentioned a couple of key things in there. And one of them was, for example, like tulip mania. People love comparing Bitcoin to tulips. Tulips expire, Bitcoin doesn't forever, which is one fundamental difference. But aside from that, every generation has had something they've invested in. There was in the housing, was the baby boomers, for example. 70s was stock market craze. I would say stock market is just as big an up and down game as the cryptocurrencies are. And this new generation of millennials that is out there really has taken heart to them. I work one-on-one with a lot of kids, and they love the volatility in it. It's like a game to them. And it's funny is when they can convert that game into real world, things, and they can go out and buy stuff with it. It's mind blowing.
But Talha, staying with you, I mean, the blockchain technology that underpins the cryptocurrencies, that is taking on a whole new dimension as that becomes more mainstream, isn't it?
It is. Yes. Well, you see that on its own, for example, like Bitcoin was version 1. We're already on like version 4 or 5, and that would be conservative as such, because, for example, what's in the future is quantum computers, right? And right now, the way that computers already work is that they can already decrypt, 4,000 bits per second or whatever. They can already do this live, and then when we quantum, though, like all of the technology that we rely on right now, for example, like pickpocketing Bitcoin will become a possibility then. It'll be as easy as like pickpocketing somebody's wallet is right now with real paper money. And so that's just some of the things that some of these developers are keeping in mind. And so they're developing quantum resistant technologies that don't have any, center per se. Like they happen locally and they're done, but they're in sync, And so so it's a blockchain is just one manifestation of decentralized processing, call it whatever you want. And then it's now like different companies are seeing the possibilities of it. They're releasing their own blockchains. Lots of companies were just adding on the name and seeing the stock price shoot up. But lots of companies are actually developing technologies that, rely on this distributed, system.
Talha Bhatty in Boston. I'm afraid we are out of time. And Craig Copetas in Paris. Thank you both ever so much.